Now, we're diving into the wrong ways to invest when you're busy. I know that juggling a hectic schedule leaves little time for managing investments. That's all the more reason to avoid common pitfalls that can cost you both time and money. First off, let's talk about what not to do. A mistake I see many busy professionals make is trying to actively trade or time the market without the necessary research. I get it. You don't have hours to spend analyzing every stock, but here's where things go sideways and why it's crucial to be cautious. Investing based on a friend's advice or the latest buzz on social media is tempting, especially when you're pressed for time. Trust me, if everyone's talking about it, you might already be late to the party. These hot tips often lack thorough analysis and are based on hype rather than solid fundamentals. Jumping in without proper due diligence can lead to significant losses if the trend reverses or the information was inaccurate to begin with. Trying to score quick wins without understanding the market forces at play is like rolling the dice in Vegas, not a sustainable strategy. The stock market is influenced by a myriad of factors: economic indicators, company performance, geopolitical events, and more. Without a solid grasp of these elements, short-term trades become high-risk gambles. While you might get lucky once or twice, consistently making profitable short-term trades without proper analysis is highly unlikely. Investing in companies without digging into their financials is a recipe for disaster. I know what you're thinking. Who has the time? But neglecting this crucial step means you're essentially going in blind without understanding a company's earnings, debt levels, and growth prospects. You can't accurately assess its true value or potential risk. This could result in investing in overvalued companies, financially unstable businesses, or firms headed for a downturn. Spreading your money thin across too many stocks without a clear plan is another common misstep. Some believe that owning a large number of stocks automatically reduces risk, but without a strategic approach, you might dilute your portfolio's performance. Over diversification can make it difficult to keep track of your investments and may lead to a portfolio that merely mirrors the market average, or worse, underperforms it, without focusing on quality and alignment with your goals. You won't reap the benefits that thoughtful diversification can offer. Remember, investing wisely doesn't have to consume your life, but avoiding these common mistakes is a critical first step toward financial success. So, we've talked about the wrong ways to invest when you're busy, but you might be wondering, what's the real fallout from these missteps? Let's dive into what happens when you do it the wrong way and why it's so crucial to avoid these common pitfalls. First and foremost, poor choices lead to financial losses that can set you back significantly. Investing without proper research or chasing after hot tips is like playing a game of chance with your hard-earned money. These losses aren't just numbers on a screen. They can impact your ability to achieve major life goals like buying a home, funding your children's education, or securing a comfortable retirement. Recovering from significant losses can take years, and that's time you can't afford to waste. Worrying about unmonitored investment adds pressure you don't need. Imagine constantly checking your phone for stock updates, feeling your heart race every time the market dips. This kind of stress can spill over into other areas of your life, affecting your performance at work, straining personal relationships, and even impacting your health. With an already packed schedule, the last thing you need is additional stress weighting you down. Time and money thrown at ineffective strategies could be better spent elsewhere. Every hour you spend trying to fix a poorly constructed portfolio is an hour you could have invested in your career, spent with loved ones, or dedicated to personal growth. Similarly, money lost on bad investments is capital that could have been allocated to more promising opportunities. Inefficient investing is not just unproductive, it's counterproductive. Without a solid plan, beating benchmarks like the S&P 500 becomes a distant dream. You might find yourself treading water financially, watching others grow their wealth while we're stuck in the same place. This stagnation can be demotivating and may lead you to question your financial decisions altogether. It can delay or even derail your long term objectives, like achieving financial independence or retiring early. Making decisions based on fear or hype leads to a vicious cycle of bad choices. Emotional investing often results in buying high when optimism is rampant and selling low when panic sets in, the exact opposite of a successful strategy. This roller coaster of emotions can erode your confidence, making you hesitant to invest in the future or prompting you to take unnecessary risks to recoup losses. It's a lose-lose situation that can be hard to escape once you're in it. Remember, investing doesn't have to be a source of stress or a drain on your resources. With the right approach, it can be a powerful tool to build wealth and achieve the life you envision, all without consuming the limited time you have. So, we've talked about what not to do when investing with a busy schedule. But don't worry, there's a better path forward. Let's dive into the right way to invest when you're short on time. Here's how you can invest smartly without sacrificing all your free time. First things first, set up a personal investment game plan. This is your roadmap to investing efficiently. Decide what kinds of stocks align with your goals and values. Maybe you're passionate about tech startups revolutionizing the industry. Or perhaps companies with strong ethical practices resonate with you. By narrowing down your focus, you save time and invest in what truly matters to you. Are you aiming for long term growth, passive income through dividends, or preserving your capital? Get clear on this. Knowing your goals helps you tailor your investment strategy accordingly. It's like planning a trip. You need to know your destination to choose the best route. Next up, use tools that save you time. In this digital age, there's no shortage of resources designed to make investing more efficient. Stock screeners filter out the noise, showing you only the stocks that meet your criteria. You input your preferences like industry, market cap, dividend yield, and the screener presents a curated list. This cuts down hours of research into minutes. Subscribe to trustworthy newsletters or financial summaries that give you the lowdown without the fluff. These sources condense market analysis, company performance, and industry trends into bite sized pieces. It's like having a personal analyst who does the heavy lifting for you. When time is limited, quality over quantity should be your mantra. It's better to invest in a few well researched stocks than to spread yourself too thin. Focus on companies with strong fundamentals, consistent earnings, solid management, and a competitive edge in their industry. This not only simplifies your portfolio but also increases your confidence in your investments. Adopt a buy and hold strategy so you're not constantly checking the market. Long term investing reduces the stress of short term volatility and allows your investments to grow over time. Remember, wealth building is a marathon, not a sprint. Don't underestimate the power of knowledge. Invest in your education to make informed decisions swiftly. Equip yourself with the strategies designed for people just like you, busy but ambitious. Online courses can teach you effective investment techniques that don't require a finance degree. They focus on practical skills you can apply immediately. Focus on proven methods that don't require you to become a full-time trader. Learn about fundamental analysis, value investing, or other strategies that align with your goals and time constraints. This way, you make smarter choices without the trial and error. Lastly, schedule quick check-ins to stay on top of your investments without overwhelming yourself. Allocate time once a month or quarter to review and adjust as needed. This periodic check-in ensures your portfolio remains aligned with your goals and lets you make timely decisions based on any significant market changes. It's a balanced approach that keeps you engaged without consuming your schedule. By implementing these steps, you can take control of your financial future without sacrificing the time you need for your career, family, and personal interests. Remember, smart investing isn't about working harder, it's about working smarter. Alright, so we've covered these strategies on how to invest smartly when you're short on time. But you might be wondering, why does this approach work for me? Great question. Let's break down how this method benefits you in multiple ways. By taking this approach, you're making informed decisions that align with what matters to you. You're not handing over your financial future to some algorithm or leaving it to chance based on hot tips. Instead, you're setting your own criteria based on your values and goals. Whether it's investing in sustainable companies, or focusing on sectors you're passionate about. This sense of control not only leads to a more personalized portfolio, but also gives you confidence in your investment choices. A strategic plan ups your chances of outperforming the market. When you invest half-heartedly, you're essentially gambling. But with a well thought out game plan, you're making calculated moves designed to yield better results. By focusing on quality over quantity and leveraging tools that streamline your research, you're positioning yourself to make smarter investments. This targeted approach can help you beat benchmarks like the S&P 500, moving you closer to your financial goals. Let's face it, time is a precious commodity, especially when you're juggling a busy schedule. Efficient tools and methods mean less time spent worrying about your investments. Stock screeners, summarized research, and a focused investment strategy all contribute to reducing the hours you'd otherwise spend sifting through endless data. This way, you can keep your investment activities concise and effective, freeing up time for your career, family, and hobbies. Knowing you have a solid plan lets you sleep easier at night. Uncertainty and lack of control are major stressors when it comes to investing. By having a clear strategy and scheduled check-ins, you eliminate the guesswork. You're not constantly glued to market news or fretting over every dip and spike. This peace of mind is invaluable, allowing you to focus your energy on other important aspects of your life without the nagging worry about your financial future. Last but not least, sharpening your investment skills can have a positive ripple effect in other areas of your life. As you become more knowledgeable and confident in investing, you may find that this empowerment spills over into your professional and personal realms. You develop critical thinking skills, become more decisive, and even inspire those around you to take control of their finances. It's a win-win situation that contributes to your overall growth and success. Implementing these strategies doesn't just improve your investment portfolio, it enhances your quality of life. You're making your money work for you, not the other way around. And the best part? You're doing it all without sacrificing the time you need for the people and activities you love. If this resonates with you, why not start putting these steps into action? Begin by setting up your personal investment game plan today. Investing doesn't have to be complicated or time-consuming. With the right strategies, you can grow your wealth, outperform the market, and still have time for what matters most in your life. Remember, the goal is to make your money work for you, not the other way around. Thanks for watching. If you found this video helpful, subscribe for more tips on mastering the art of investing, even with a busy schedule. Catch you in the next video.